If you applied for the Caliber Mining and Logistics IPO, today is the day you find out if you got lucky. Because this issue didn't just get subscribed, it got smashed. We're talking bids for over 100 crore shares against a tiny pool of just about 75 lakh on offer. Stick around, because in the next 10 minutes, I'm going to break down the allotment status, what the gray market is whispering, whether the fundamentals actually back up the hype, and, most importantly, what this means for you on listing day. Let's get into it. Hey everyone, welcome back to the channel. If you're new here, this is where we cut through the noise on IPOs, earnings, and market moves. No fluff, just what matters for your money. Quick favor before we dive in, hit subscribe and tap that bell, because IPO season is heating up and you don't want to miss the next one. Alright, Caliber Mining and Logistics. Let's talk numbers. So here's the timeline. The issue opened on the 17th, closed on the 21st, allotment got finalized right after. And what happened in between was honestly one of the more dramatic subscription runs we've tracked this year. Day 1? Pretty modest. Just over 1 time subscribed. Nothing to write home about. But watch what happened by day 2. It jumped to nearly 24 times. And then day 3, it exploded. We're talking subscription numbers well past 140 times, with some trackers putting the final tally north of 150 times overall. Now here's the part that really tells the story. Who was buying? Retail investors came in solid, somewhere in the 40 times range. Respectable. But the real fireworks were in the institutional categories. Non-institutional investors, that's your high net worth crowd, piled in at anywhere between 270 and 280 times subscribed. And qualified institutional buyers, the big funds, weren't far behind at over 240 times. That kind of institutional stampede on the final day tells you something important. The smart money came in late, and they came in heavy. Let's talk about what the company actually raised. 450 crore rupees total. That broke down into a fresh issue of around 400 crore, meaning that money goes straight into the company's books, and an offer for sale worth about 50 crore, where existing shareholders cashed out a portion of their stake. Price band was set between 402 and 424 rupees per share. And before retail even got a shot at it, anchor investors had already locked in their allocations. We're talking names like a well-known mutual fund house, an equity investment trust, and a couple of alternative investment funds. When quality anchors show up before the public round even opens, that's usually a signal of institutional confidence in the story. Now let's get to the question everyone's actually asking. What's the gray market premium saying? And here's where it gets interesting, because depending on which tracker you're looking at, you'll see different numbers. Some trackers had the premium sitting around 60 plus rupees earlier in the week, which would put the estimated listing price in the high 400s. But as demand accelerated on the final subscription day, other trackers pushed that premium up into the high 80s to mid 90s range, implying a potential listing anywhere from 510 to 518 rupees. That's a 20 to 22% pop over the top end of the price band. But, and this is important, the gray market is not a stock exchange. It's unofficial, it's unregulated, and it can swing hard. In fact, in the days leading up to listing, this exact premium moved from the 80s all the way up past 110 and then came back down. That kind of volatility is a warning sign in itself. Don't anchor your expectations too tightly to a number that's been bouncing around like that. Okay, hype aside, let's talk fundamentals, because that's what actually matters 6 months from now, not just on listing day. Caliber Mining and Logistics is sitting on an order book of roughly 9,500 crore rupees. To put that in perspective, that's close to 5.7 times their revenue from the last financial year. That's a huge amount of revenue visibility already locked in for the coming years. Return on equity comes in at a strong 27.8%, and post-listing, the stock is valued at around 17.5 times earnings, which several analysts have called reasonable, not stretched, especially compared to the return profile. Brokerages have largely landed on the same page here too. Multiple houses recommended subscribing to this issue for the medium to long-term investor, not just for a quick listing pop. But, and there's always a but, here's the risk you need to sit with before you get too excited. This company's revenue is heavily concentrated around contracts with one giant customer relationship, the Coal India ecosystem and its subsidiaries. When your growth engine is that dependent on one client group, your future isn't just about your execution, it's about contract renewals, government policy shifts, and how fast India's energy transition actually plays out. That's a real concentration risk, and it's the kind of thing that doesn't show up in a GMP number, but absolutely shows up in a 5-year stock chart. So the long-term thesis here isn't a slam dunk. It depends on this company diversifying its client base and executing cleanly on that order book. So here's where we land. Listing day is here. Shares hit BSE and NSE. Trading kicks off after a special pre-open session. If the gray market premium holds anywhere close to what we saw at its peak, early investors could be looking at listing gains in that 20% range. If sentiment cools and markets can turn on a dime, that gain could compress down into single digits or the low teens. Either way, the story here isn't just about today's pop. It's a business with real revenue visibility and strong return metrics, sitting inside a sector that's got both tailwinds and a client concentration risk attached to it. That's the full picture on Caliber Mining and Logistics. Subscription numbers, gray market signals, the fundamentals, and the risk that matters most. Quick disclaimer before you go. Nothing here is investment advice. GMP numbers and brokerage calls are indicators, not guarantees, so always do your own research or talk to a financial advisor before making any decision. If this breakdown helped, smash that like button, drop a comment with which IPO you want me to break down next, and I'll catch you in the next video.